Good evening, ladies and gentlemen. Thank you very much for having me here in Edinburgh this evening. So let's talk a little bit about Tertiary Minerals and what we're doing and a progress update. So the picture there is our project out in Nevada, and that was drilling over the winter of last year in January. So you can see it gets pretty cold in the winter. Disclaimer. A little bit about the team. We're a small team, but we're a team of experienced mining professionals with skill sets running from exploration right through to development and also finance. My background is 20-odd years experience working at the coalface, developing mine projects, managing mine projects in various parts of the world. So very much an operational background. Okay, so what is our aim? Our aim is to become a reliable long-term supplier of high-quality fluorspar to the world markets. To be revenue generating in the near term, and I'm going to talk a little bit more about that, and add value to our mineral projects through discovery, acquisition, and development of mineral resources. Okay, so a little bit about Fluorspar. Some of you will know quite a bit about Fluorspar, some others not. Fluorspar is the commercial name for fluorite, so it's calcium fluoride. Its commercial source is the chemical element of fluorine, basically. And it's the lightest of all the halogens, so pretty high up on the periodic table. And because of that, it's largely irreplaceable. Two commercial grades are made globally. We've got metallurgical grade, which is a low grade calcium fluoride, ranging from 60 to 96% calcium fluoride. And then the premium grade, which is called acid-spar or acid grade, that's running at about 90 plus 97% calcium fluoride and low silica. And that's the product that we're aiming to produce from our assets. Just a little bit about the uses. Global fluorspar market is about 6 million tonnes, 5.5 to 6 million tonnes. And the acid spar, which is what we're looking at, represents about 3.5 million tonnes of that market. Two key uses. One of the main uses is to make aluminium fluoride. Aluminium fluoride is used as a flux to make aluminium. It reduces the melting temperature. And then the largest use by far is hydrogen fluoride, HF. HF forms a base for probably everything that we use in daily life. So, you know, household names like Teflon and Gore-Tex, the base is hydrogen fluoride. The largest use is actually refrigerant gases. So a lot of you will be aware over the years historically refrigerant gases have had a bad name from an environmental perspective. So you'll all remember the old CFCs. Then there was this development to more environmentally friendly, less ozone depleting gases. So the CFOs, the HFOs, and then moving into the sort of new gases that are coming onto the market, and that's been driven by environmental legislation, are the HFOs developed by companies like sort of DuPont and Honeywell. And so the important point about the chemical properties of fluorine is that in these refrigerant gases, there's no replacement for fluorine. There are some alternatives like CO2, but they're not as efficient and they're not as safe. Okay, so other sort of emerging uses, lithium batteries, for example, is an emerging use. Modern medicines, more than 50% of modern medicine formulations have fluorine in them in one form or another. Okay, so we'll just move on to the market a little bit. The major, like a lot of commodities, the major producing regions, China produces more than 50% of the world's fluorspar. And then you've got other key regions, Mexico, Mongolia, South Africa and Vietnam are sort of key producers. Major consuming regions, China, North America and Europe are the three largest. And basically over the last sort of, I suppose the decade, 98 to 2008, we've seen a sort of a steady rise in fluorspar prices. And that's basically been driven by downstream demand, but also the China dynamics. You know, if you go back 10 years, China was exporting sort of 40% of its produced fluorspar. That's down to about 10%. And the forecast is in the next few years, China will become a net importer of fluorspar. And that's because of their downstream demand for the end products. 2009, the financial crisis, we saw a contraction in the acid-spar price. A lot of that is basically we're going through this transition zone. I talked about the environmental legislation, this transition between the HFCs to the HFOs. So we are going through that process at the moment, but actually that does form an opportunity for us, and I'll come on to that. So current prices are running sort of $250 to $300 a tonne fluorspar. That's the acid-spar that we were talking about earlier. Okay, so just moving on to the opportunity. You know, the industry forecast, producers, end users, analysts, is that demand and price will increase, and that goes back to this irreplaceable property of fluorspar. There's no large-scale alternative or recycling of fluorspar. And we've got this refrigeration, the generation of the new HFOs. Again, key element is fluorspar in there. You've got energy reduction. We talked about the aluminium fluoride has been a key end user. What's happening because of this price? You've got a lot of the higher cost mines are closing and permanently closing. Smaller mine operations, high cost underground mine operations. But again, that opens an opportunity for us, and I'll come on to explain a little bit more about that. Actually, the dynamics, the market dynamics and the economic importance has been recognised by the EC. So it's recognised as one of 20 critical raw materials in Europe. It's also recognised in the US as a strategic mineral. The US imports 100% of its fluorspar. And you've got the major companies like Honeywell and DuPont, which are the key end users there. So I'll explain how that fits into our strategy. It's, you know, all of these drivers, you know, we've got 13.1 million tonnes of JORC proven fluorspar contained in the ground to capitalise on these opportunities in the future. Okay, so where are our operations? Where are we located? So we talked about Europe and the US being key markets outside of China. Europe being a net importer, USA 100% import reliance. So we've got 3 projects. We've got 2 European projects. We've got the Sweden project, which is in north central Sweden. That's our most advanced project. We've got the Norwegian project, which is in southern Sweden, and more recently we've taken on the USA project in Nevada. You can see how we've grown our resource base over the last few years. So you've got 2010, we've got no JORC resource base. We've slowly built that up. So we're now sitting at 13.1 million tonnes JORC classified contained fluorspar in the ground. Some of you may ask, why continue to build your resource base? If you're going to be taken seriously by the key end users, the Honeywells and the DuPonts of this world, it's really important. They're looking at security of supply. They're looking at long-term supply contracts. So it's actually, for a small company like us to be taken seriously, it is important to go through this process. It takes time, but it's important that we do that. Okay, a little bit about Sweden, most advanced project. As with most industrial minerals, infrastructure is a key part. You know, the cost or the selling price of industrial minerals don't carry large infrastructure projects. So Sweden, you know, it's in a great location. This is the main E12 highway, which runs literally past the resource. The resource just sits in here. We're 25 kilometres off a railhead. This railhead runs through down into the port of Umeå, It's about 240 kilometres, and this is now finished now, but this is a bulk terminal that they've just been building in Umeå port. So the infrastructure is already in place. Okay, a bit about the deposit. So when we ran the scoping study, we did a first phase drilling program which produced about 18 million tonnes, just above 10%. That was non-JORC classified, and we ran a scoping study on that. The capex to build the project, about $46 million US dollars. That would generate an annual turnover of about 34 million US dollars. Pre-tax NPV, 8% discount, about 33 million. So we've got a payback of less than 3 years on that project. Since the scoping study, we've had quite a few developments. We've put another 46 diamond drill holes in there, and we now have the resource taken through to JORC. We've got it high confidence. We've got 28 million tonnes at just above 10%. So it's quite a large resource, and high confidence in the indicated category. It's about 25 million tonnes of that. When we got the larger resource, compared with the scoping study, we reduced our strip ratio from 2.2 tonnes of waste to ore to 0.8 tonnes of waste to ore. So that will have an impact on the economics, positive impact on the economics. When we did the transport from mine to the port, we did the cost calculation based on truck transport because the railhead wasn't built near the mine. Since then, the railhead has been constructed 25 kilometres away from the mine. So, you know, you can see this is the E12 highway that we talked about. The deposit literally runs past it. It actually outcrops at surface here, so that shows you the low strip ratio, and it's horizontally bedded. It's a very simple mining operation, small mining operation, in that it's horizontally bedded and it's near surface. Okay, so last year was a frustrating year for us. We've gone through 3 years of environmental test work. We've gone through 3 phases of drilling, JORC classification. We prepared a mine permit application back in July 2014. And in February 2016, we got a 25-year mine permit awarded. So that was a good day for us. Since then, there's been a number of developments. The mine permit was initially appealed by the semi-reindeer herders in the area. Nothing specifically against our project. They are against any kind of development, whether that's a mine or a new wind power project or whatever. They do sort of oppose any kind of development. So the appeals went through to the government, but since then there's been another development. Some of you may know Tasman Metals down in southern Sweden. It's a rare earth project. They had their mine permit revoked on an appeal last year as well. And actually the basis on which they had their mine permit revoked was that, and this is new, it's a new case law in Sweden, is that the mine permit historically only covers your resource area. Everything beyond that, your infrastructure, your tailings facility, was always covered through the environmental permit process. What they said is the EIA needs to cover the wider area on a mine permit application. So they got it revoked on that basis. So a whole raft of applications, either in appeal or waiting decision, have been reverted back to the mining inspectorate for reassessment. Ours sat on the desk of the government for the majority of last year, and then we knew which way it was going, but it's gone now back to the mining inspectorate for reassessment under the new case law. The difference between us and the Norway case, Tasman, is that we did do a wider EIA on the tailings facility, on the infrastructure, when we submitted our mine permit. So, bearing in mind we've got very, very strong stakeholder support from the municipality, from the county administration board, from the landowners, and put that together with an EIA which covers the wider area, we're confident that we will get our mining permit. The timing is the issue, because they've got a whole raft of cases sat on the desk. waiting for assessment. We can't give a time on that. We are applying pressure. You know, I was up in Sweden week before last, and we're trying to get this through as quickly as possible. Okay, Norway, second European deposit, slightly different deposit. Again, it fits on the infrastructure basis. It's 50 kilometres from a deep sea port, and it's only 80 kilometres southwest of Oslo. So again, infrastructure is all in place. Was previously mined in the Second World War by Hydro, Norsk Hydro, which you'll all have heard of. Very different deposit to Storuman. This is a higher grade deposit. It's a 25% CAF2 head grade, and steeply dipping. So this would lend itself to underground mining. What we've done with this project is, you know, we did a resource estimate under JORC. You can see the size difference. It's only 4 million tonnes at 25%. The difference is that it's, you know, it is open at depth and it's open along strike. So it needs further drilling, this project. We got positive economics on a scoping study, but we've decided to put this project on hold while we progress the leading European project, which is Sweden. Last year we negotiated with Hydro. Part of the land and the old mine workings belongs to Hydro, and we negotiated at Hydro that we would purchase the old mine workings, which will help us with permitting in the future, following due diligence for 1 Norwegian kroner. Nevada, okay, Nevada, again, remember the sort of key markets. We sort of talked about Europe and now the USA. Nevada we've had for just over 3 years, and we've been quite busy on there. We've got now 146 mining claims covering over 2,800 acres. It's all on BLM land, and again, key infrastructure is in place. It's in Eureka County. You know, 80% of the population in Eureka have their, gain a living from mining, so they actually want us there. It is mining friendly. When we first got the project, we did 2 phases of drilling, and that gave us a maiden JORC resource of 38 million tonnes at 10%. So you can see already significantly bigger to the Sweden project. We then proceeded with phase 3 drilling, and we upgraded that JORC. We've now got 86 million tonnes at plus 10% in the ground there, so it's a significant resource. This just gives you an idea of the size. You know, the resource is still open at depth, and it's still open laterally. You know, this is 1,300 plus 1,300 metres. This is the optimised pit shell that we've run our mine model on, and then, you know, over 1,100 metres. So you can see the sheer size of it. Open pit, low strip ratio again, so similar to Sweden. This is our JORC resource area here. So last year we completed some further drilling to test higher grade areas or higher grade mineralisation and continuation. Again, we hit higher grade mineralisation, so the head grade is at the moment just above 10%, but we are hitting bands above 20% in the higher grade. In the summer of last year, we got world-renowned economic geologist Dick Sillitoe out on the deposit to help us really understand. I mean, it's a big deposit, and some of the geology is complex. Help us understand really what's happening here and where we can target higher grade. So this is a target for us now for more higher grade. You know, changing a resource from 10% to 15% makes a huge difference to the economics of the project, a big difference. So we're currently modelling that. We're modelling the work that Dick Sillitoe did for us. We're doing some metallurgical test work as well to upgrade it to a 97% CAF2. And following the successful completion of that work, we're aiming to get a scoping study out certainly by summer this year. Okay, just a little bit about our running a bit short of time, but we have some legacy gold projects. We've been kept hold of those in Finland. We successfully sold those the back end of last year. The license transfer is just currently going through. We sold those to a company called Orion Resources, who are very active in Finland. They're TSXV listed, market cap of about 100 million Canadian dollars, and they've got a JV in Finland with gold miner B2 Gold, market cap of about $4 billion. So they're funded, they're serious about the project. We took a small initial consideration for the project of £100,000, partly to be paid in shares, partly cash. But we've got a pre-production royalty, so every ounce of gold that they find in the ground, we get a pre-production royalty of 1 to 3 ounces, depending on the classification, and we've retained a 2% net smelter royalty. So there's a potential income stream there for the company with serious people involved with that. Okay, so just sort of closing on the investment case. So we're the only UK publicly listed company with exposure to fluorspar. It's a critical mineral, one of 20 in the EU, strategic mineral in the US, and we've got 3 strategically located, 100% owned resources in those key markets. There's no large-scale commercial alternative or recycling. We've got broker research here. SP Angel, 10.6p a share, and Beaufort have put us on 9p a share. So similar outcomes from two analysts there. We're currently running, this year we've been running around about the 1p mark. Our current market cap is 3 million, so very small market cap. 13.1 million tonnes of resource in the ground, current selling price $250 a tonne. So we think there's significant upside when we get the mine permits and we start to develop the mines. We are also looking, we understand that the process is a long one to get the permits and to get the mine development in place. We've recognised that, so we are actually looking at evaluating some smaller projects, which we're currently talking to three companies at the moment, where we would have a low entry point, low capex projects, but would give us some near-term revenue. It's not a distraction on what we're doing with the Fluorspar. There is a Fluorspar project in one of those that we're evaluating, but what it will do, it will make us a more sustainable business in the short term by having some short-term revenue, whilst we have the medium to longer term strategy of developing the Fluorspar deposits. I think I've run out of time, but thank you very much, and happy to take questions.
Questions, anybody? Thank you.
Good evening.
Good evening.
As I understand it, you're saying that America imports 100% of its requirement?
Yeah.
China's a net importer?
Is moving towards being a net importer, yeah.
So why are some of your competitors closing their mines?
Basically, when you saw the price graph there, so whilst we've gone through this transition phase, we have had oversupply in the market. A lot of the smaller mines, some of the mines in Africa where you're a long way to a port and you've got underground resources with lower grades, expensive producers. So they've been forced out, some of them are being forced out of the market because of the current price. Some of them have actually, getting towards the end of the resources, you hit a tough market, you say, okay, right, now it's time to close. These underground mines have been, they're not being put on care and maintenance, they're being shut and they're flooding. So again, that opens up an opportunity. We're looking at large resources and a large sort of production base for our mines. So we see that as an opportunity. China, if you look at America's key sort of suppliers at the moment are China and Mexico. So you look at what's happening with China. We see a gap in the market for, particularly in our deposit, an MB deposit, which sits in Nevada. So, yeah.
Gentleman at the back.
Hello again. A couple of small questions, dead simple ones, I hope. 13.1 million tonnes, is that recoverable?
Yeah, that's contained, so that's mineable, so that's contained fluorspar, yeah.
Okay.
Yeah.
Second one then, I'm in a couple of miners, I know how much money goes out the window. What's the cash position?
Okay, so cash position at the end of our financial year was about £450,000 in the bank. We're based in Macclesfield, we have a small team. Our annual cash burn is around about £340,000 a year. So if you compare that with a lot of AIM-listed junior mining companies, it's a pretty low cash burn. The projects are 100% owned, so you could class that expenditure as discretionary. But so yeah, you know, that's our current position.
That's normally the CEO's salary, isn't it? 350,000.
Yeah, I mean, we've got 4 directors, and so the 4 directors, 4 of us take basically the cost is 120,000 for 4 of us. So yeah.
So to actually continue, then we're going to need some cash calls at some point.
I mean, that's the, you know, at our stage in the game. That's the nature of the beast. We try and minimise our, you know, we make our money go a long way. I think you've seen what we've done on the MB project. So, you know, sort of, you know, last year we raised about $1 million, but you know, we've seen how much work that's sort of seen. And end of that year we had 450 still in the bank. So, yeah.
Okay, thank you.
Okay, thank you.
Could you just comment on your shareholder base and how you're incentivised?
So I mean, pretty similar to how you explained your base. I mean, we have a couple of sort of 4 and 5% who are seed capital when Tertiary was set up. No institutions on board, and the rest is normally retail holders. So you know, you've sort of seen the volatility on the share price whilst you're going through permitting issues. You know, I suppose that's one of the issues. My incentive scheme. You know, I'm sort of have options on various prices on the share price, but also on performance in terms of producing the measurable sort of let's say benchmarks to go to producing a mine, and that's built into my contract. So you know, we don't draw massive salaries. You know, my incentive is building a mine, and you know, we are running the business that we will be the miner. You know, that's my background. I've got a mining background, so that's our aim. Yeah. Okay.
I've got one quick question. In the short term, you mentioned Finland and the recent sale.
Yeah.
What do you put a value on that in the short term? Because obviously it could be a very short-term asset gain for you.
Yeah, I mean, short term, I mean, you can't really. I mean, short term, it's 100,000. You know, it's that initial consideration.
But there's no resource estimates you've done previously on that?
No, I mean that's the thing. I mean, the company was in gold many years ago, but we recognise the value in them, but we've never produced the resource on those. So you know, we're really pleased that we've got sort of, you know, decent partners on board.
But they could resource that up quite quickly.
That's right. Yeah, and take that through pretty quickly. So yeah, you know, we're really pleased. You know, we're glad we've kept on to the assets. Yeah.
Great. Yeah. Thank you very much indeed.
Yeah.
Thank you.
Thank you.